Test, 1 2 1 2. Test, 1 2 1 2. What's going on, team? It's Ricky with Technical Solutions. Hope that you guys are all having an amazing Sunday. Welcome to our Sunday Stock Talk. For those that haven't ever joined us, I go live every single Sunday at 6:30 p.m. Mountain Standard Time. If you ever want to tune on into one of these live sessions, just make sure you hit that subscribe button and turn on that little post notification so you get alerted when it is that I go live. We're going to be breaking down the top 10 stocks, looking for the next week, right? This is something that's shared to us by our group members. One of the things that I want to make you guys very well aware, as of right now, the futures market is opened up. The NASDAQ market took a huge dive over the weekend, right? We thought that the market was going to recover. Unfortunately, it's definitely not going that way. We talked about this. This is why we talk about the preparation of not just expecting the best out of a market, especially for the past 2 months, but anticipating the worst. And this is where mitigating and managing risk isn't taken into consideration, and why we always encourage you to be careful with your position size. You know, the cheap can get cheaper, and I think if the past 2 months have taught us anything, it's that markets can continue to drop even when you think that they're already cheap. It's not that it's a bad buy, but it's asking yourself that difficult question: can you tolerate the time it's going to take for the market to recover? Because the question or the concern for myself is not, oh no, the market's never going to recover. That's not the case. We know markets always recover. But how long will it take? And can you tolerate that time with how much you have invested right now? That's a difficult question to ask yourself, especially if you're just getting started. What's up? What's going on, Umar? What's going on, Karen? We got Jared, Mario. We got British Trader. What's up? We got Charon, Donald Pump. What's going on, guys? What's going on, Kevin? I appreciate you guys taking time out of your busy Sunday and joining us. But yeah, huge dive for the NASDAQ market in correlation. If the NASDAQ market were to open right now, or the market were to open up right now because of how much the NASDAQ market is down, TQQQ would be down 6%. So again, something to take into consideration. We saw a really nice recovery for the past 2 days. It was a 28% recovery, if I'm not mistaken, from the overall bottom of $40.30 to the overall highs, 29%. Think about that. That's absolutely insane. But you better be ready for tomorrow, right? You better be ready for that pullback. What's up? And again, if you guys want me to break down any specific stock, please share that right now in the live chat, and I'd love to break it down for you. But when asking the question, what are my thoughts on TQQQ? What are my thoughts on the overall NASDAQ market? Real quick, we're going to head on over to IXIC, which is the NASDAQ index, right? And on the day chart, we could see that we're very close to the EMA line, but we're still getting rejected, right? The market is not bullish. We have not entered or received confirmation of a recovery. We're still getting rejected here, making lower highs, lower lows, all of that good stuff. And this is why, especially with how the market's going to open tomorrow, we're going to see the market open in the red, right? Based off of what we're seeing right now with these NASDAQ futures being down 2.13% as of right now. So still getting rejected. EMA is still acting as a resistance level. But again, it just means that we simply have to give it more time. No reason to overcomplicate it. All right. All right. Let's see. So we have people asking, so let's go ahead and break these down. So we have people asking about Tesla. So we have William asking for a Tesla breakdown. Tesla, I don't know if you guys have seen the correlation between Tesla and the overall NASDAQ market. I think they're pretty similar. I don't know if you guys would say that they are, so we can compare it to IXIC and actually compare it with the past year and just its overall performance as of right now. So we could see that, this is IXIC, this is Tesla's performance, especially as the market's been selling off. I would say that, they're pretty similar. If anything, Tesla's still a little bit more on the oversold side. It's still hurting a little bit more than the Nasdaq, obviously, index. Nasdaq is made up of a bunch of different tech stocks, and then there's Tesla. Obviously, it does have an influence. They do influence one another because of Tesla's market cap, but things to take into consideration. Is Tesla cheap? 100%. I think Tesla, at this price level, it's one of the main reasons that I decided to buy some, is I bought enough shares where, I didn't buy so many shares where I'm going to feel uncomfortable with how long it might take for Tesla to recover. So again, it's just asking yourself that difficult question of, I agree there's great quality companies right now that are very undervalued based off of previous price points, right? So if we look at Tesla right now, based off of what we know as its previous resistance level and from where we're at right now, it has a great upside. It literally has 50% upside. So the question is not, hey, do I think that Tesla can make me money? I know it can. But can I tolerate the time it's going to take Tesla for it to make me money, right? And we can actually get worse before we get better. So if you do decide to buy in early, if you do decide to buy before confirmation, as we're still seeing that EMA to be a resistance level, then again, it's simply asking yourself, things might get worse before they get better. So make sure that your position size, kind of like resembles that, right? So let's go ahead and break down Roku. So let's go back to the single grid. Here we go. I appreciate you guys tuning on in. So Roku, consistent descending pattern, making lower highs, lower lows. This is one of the stocks that did really, really well during the peak of the pandemic and has been hurting ever since, right? We've been selling off after it hit highs of $490 a share. This would be a little bit different than, Facebook or Tesla or something like that, right? Demand levels are not as high as they were before. And like they said in their earnings, their guidance is, again, not in the right direction. As of right now, there is no indication of a recovery. Asking yourself that very simple question. Are you missing out on anything by not being invested in Roku right now? I wouldn't say so, right? Because Roku is not indicating signs of a recovery, right? If you're asking yourself, like, when's the best time to buy Roku? Well, you saved yourself money by not being invested since August, right? It's been selling off since August. And as of right now, we're not getting it's not beginning to trade sideways. It's not beginning to trade above the EMA line. It's literally doing what it's been doing for the past 8 months. So with that being said, I have all my alerts set. I see the potential and the recovery potential on something like Roku. We have great upside potential. One thing that always makes it easier for myself, and it's one thing that I always try to encourage for all of my Learn Plan Profit members, is FOMO is a challenge, right? Especially in the stock market. You always want to be invested before they run, but you don't want to get in too early if they potentially sell off. So with that being said, I always like to take into consideration how much recovery potential a stock offers. And this Roku, from the price point we're at right now back to $490, again, is 256%. Insane, right? Think about it. You don't need to rush into Roku to make money. You have enough margin. You don't have to be greedy. You don't have to be, counterproductive. I think it really puts things into perspective where, wow, I have a lot of margin to work with. I don't need to get in early. I can wait for confirmation. I can stay disciplined. I can implement structure with my trades. And I don't have to get sloppy and just jump into it just because I can. I want to jump into it when it makes sense. Do you get what I mean? So I think every single time that you ever question yourself of like, hey, should this be something that I jump into right now or should I wait? Looking at how much percentage potential for recovery it offers is a great thing. So we got Wayne with WTI. So WTI, we talked about this last week, right? Where if the tensions continue to arise, oil prices, especially the WTI future, right, Wayne? Right now we're at that resistance level. So it's not that WTI is a cheap stock because it's not, right? WTI as of right now is at its same resistance level, right around $4.75, right? With that being said, if they could go into war. We can see oil prices potentially hit up to $140, $150 a barrel, and it's already very expensive. I mean, for the first time since 2014, oil prices hit $104, $105 a barrel. It's insane, right? So as long as there's that uncertainty, and if we do transition into war, Russia, for you to understand the correlation, Russia is one of the world's largest producers of oil and one of the world's largest exporters of natural gas. So pay attention to those two commodities, right? I made a watch list. I shared it on YouTube. I also shared it with my Learn Plan Profit group, and I made a watch list of oil-based stocks, right? Or futures, and that focus on oil. Oil is expensive right now. So it's not that oil is a cheap price. It's that if things continue to get worse in Russia, you can see why they can continue to go up. That's the correlation that I want you to understand. It's making sense of your trade, not because they're great prices, but because if the market does begin to take a dive, we at least want an outlet where we could potentially, invest our money. Alrighty, so let's see. We got Alex Hacker with SQ. I appreciate you posting that in the ticker call out format. So that is ticker symbol SQ. Let's go ahead and break that down. And again, make sure that if you want me to break down your stock, just share it in the live chat. That would be great. So we got ticker symbol SQ, very similar to Roku, where it performed very well before and has been selling off ever since, August as well, right? It peaked in August and it's been selling off, right? Now, for one of the first times ever since it broke below the EMA line, we're actually trading above. So it had a huge day, which is actually a big concern. It had a huge day on Friday. We broke above the EMA line. That's great. Did it report earnings? Let me see. Why isn't it popping up? Yep, the 24th. So it did report earnings, causing the stock to completely skyrocket. That's based off of news. Like we've said before, especially if you've been on my channel, any reaction tends to be an overreaction. So I would be very careful. I'd be very careful with getting too excited too soon. I would love to see SQ indicate signs of a recovery. I mean, it has great upside potential, right? So 140%. But let's not get too confident. It's been selling off for the past 8 months. Right? We cannot be surprised if it continues to sell off. It's great that it reported positive earnings. Now it's asking yourself, is this thing actually indicating signs of a continuous uptrend pattern? And do I want to be a part of it, right? Am I missing out by not being invested in SQ? A very simple way that you can put things into perspective for you when something is beginning to indicate signs of an uptrend. So I really like this. I think that this is something worth paying attention to. I would be very, very careful with its current price point because it's because of its earnings that it's at its current price point, and it was up 26%. Normally, we tend to see a correction shortly after earnings. So let's go ahead and move on to the next one. So we got trade plan, Sofi. What's going on? So we got Sofi here. Alrighty. So, oh, nope, not this one. Alrighty, Sofi had a previous support range right around $14.40, had a previous resistance range right around $24. No indication of a reversal just yet, still trading below the EMA line. Again, asking yourself those difficult questions, or very simple questions, if anything. Are you missing out by not being invested right now? Is this thing indicating signs of an uptrend? How much margin do I have to work with? Where would it make sense for me to begin to buy a position in something like Sofi, right? So we have 120% margins to work with based off of previous resistance levels and where we are right now. It's still trading below the EMA line, and it's been getting rejected ever since it peaked, again, back in November. So it's something to take into consideration. It's been selling off. It's been bearish. It's cheap. The cheap can get cheaper. That's what the past 2 months have taught us, right? But that doesn't mean that we don't have to look into it, right? We can add this to our watch list. We can set our effective alerts and then follow up with it when it makes the most sense. So, alrighty, let's go ahead and break down Penn. So PENN. So Penn National Gaming, I know was very bullish, hit highs of 142 and right now at $50 a share. Very cheap based off of previous price points, this thing has to have crazy upside potential. But again, it's not indicating signs of an uptrend. It's kind of trading sideways, which is somewhat a good sign. At least it's no longer selling off. It has 182% recovery potential based off of previous highs and based off of where we currently are right now. I can see why Penn Gaming would be in your watch list, but I like to keep things simple. I would just like to see this thing begin to indicate signs of an uptrend. That's really all I would want. As long as this thing begins to indicate signs of an uptrend, I think that's all that really matters. Once that price action is in our favor, we have that recovery potential, the direction's in our favor, we can slowly average up into our position as long as it, makes sense, and move on from there. So, alrighty. So what's up, G? How do you think AMC will do on Tuesday earnings after Spider-Man sells? Yeah, I think AMC is a hyped up stock, right? So we all know that. We've been saying that from the very beginning. I try to look out for our beginner traders, and anytime that I love day trading AMC. Trust me, I love it, but I understand that it comes at a greater form of risk, and I will never, like other people, right? I've heard other people on YouTube. I don't watch other people on YouTube, but I've heard other people where they will try to promote their specific stock and try to get other people to jump onto the same bandwagon. I don't need other people to take the same positions that I do, right? With that being said, I always want to make sure that I look out for our beginner traders. And do I see recovery potential on AMC? Yeah, but AMC is a momentum stock, right? It's based off of news, it's based off of hype, and I don't expect it to recover anytime soon. I think it's very naive for someone to think that one movie will carry an entire company, but it wouldn't surprise me that news alone of Spider-Man, because of the type of stock that AMC is, that all the Redditors jump into AMC because of the hype. As long as you understand that it is hype, then I think that's all that matters, because it's all about your intention. You can make a lot of money on a pump and dump as long as you get in and get out properly. It's not an investment, right? So you just need to understand the intention that you have with these specific plays. Is this an investment? Is this a swing trade? Or is this a high risk day trade? And then once you understand your intention, you formulate your plan. Does it meet your criteria? This is my entry, this is my position size, and this is my exit. Just make sure you don't sell yourself the idea. As long as it makes sense and the numbers make sense and the risk to reward ratios make sense, that's always what matters most. So let's go ahead and do two more, and then we will end it there. So we did 1, 2, 3, 4, 5, 6, 7, 8, 9. Let's go ahead and do two more. Again, if you guys want me to break down your stock, smash that like button and make sure you share it in the live chat. So Crocs, let's go ahead and break this down. Crocs as of right now, consistent descending pattern, lower lows, lower highs. It did absolutely amazing for quite a while. It's been getting absolutely trashed ever since then, right? No indication of a recovery, still trading far below the EMA line. I would set an alert and not overcomplicate this. Set an alert for the break above EMA and allow the opportunity to come to you. Set your alert, have your parameters in place, but there's no reason to take an early position on something that looks like it's simply just selling off. So let's see what's the last one that we're going to break down. So here we go. All right, TGT has earnings on Tuesday. Let's go ahead and check out. Earnings have been killer, right? So I don't personally like trading stocks during earnings. If you, for some reason, think that earnings is going to cause Target to go through the roof, that's up to you, right? But as of right now, I'd be very, very careful. I would look into how Walmart reported earnings when it did to see how it reacted. If I'm not mistaken, Walmart sold off. So if that sold off, then it would be expected something in that similar market, right? A lot of people do that with airlines. Whichever airline reports earnings first, you kind of would assume that the other airlines are going to have very similar earnings. TGT, cheap, very oversold, very bearish. If you want to hold during earnings, that's up to you. I personally would not. We've seen it time and time again where the cheap can get cheaper with Roku, with Netflix, with all those companies that we thought were already super undervalued, and then they drop another 20% when they report earnings. So if you decide to hold during earnings, I don't just want you to think about the good side. I need you to take into consideration the downside as well. So set those alerts for the break above. What is that? EMA right around 211, 212. But also let's follow up with it. I would love to, capture and break this down, especially if you guys are part of the Learn Plan Profit group. It's super, super important for us to come together during these like very specific and critical moments. Not just with everything that's going on over in with Russia and Ukraine, but everything that we still have to deal with here in the United States, right? What are concerns? What's bringing down the market even before the tension overseas, right? It was interest rates and it was inflation, right? So this is something that we still have to take into consideration. On top of that, a bunch of big companies are reporting earnings. This influences the market, and these are the difficult conversations that you must have with other people, right? And that's why I think I enjoy my daily live trading sessions with the Learn Plan Profit group, because we kind of all get on the same page. Imagine people always like to ask, for Learn Plan Profit, I host these daily live trading sessions. They always ask, what are those daily live trading sessions like? I would say it's much like this, but I'm actually trading, right? I'm trading if direction's in my favor, and if everything meets my criteria, right? But imagine every morning, right at market open, to be able to have a video very similar to this, where I get to engage with you. I get to ask you, answer your questions in real time. We trade together if, our criteria is met when it comes down to our day trades. That's exactly what our daily live trading sessions are like. So I'm excited for what's to come. Hopefully good news. But again, as of right now, the market is down 2%. The NASDAQ market is down 2%, 1.9% to be exact right now. So if the NASDAQ market were to open right now, TQQQ would be down about 6%. So just make sure that you're aware of that. So I really do appreciate your guys' time. I hope that I earned a thumbs up in this video. I'm very excited for this up and coming week. We're almost going to be hitting the full 2 months of the market selling off. And at the end of it, right? I mean, it's been a very challenging time to trade, but I think that's why people say, the greatest challenges after you accomplish them tend to follow with the greatest fulfillment. And I think that's what I'm most excited about, is that all of you guys that have been trying to be so patient, that have, really been waiting patiently for the market to begin to recover, this is where it begins to pay off. I mean, market isn't recovering as of just yet, but once it does, that's again where we get to reap all the benefit and where it pays for the past 2 months of time that we've spent waiting for this opportunity. So I personally think it's one of the best times to learn how to trade during these very difficult and challenging times, because I think it really builds a trader to have a strong foundation, in my opinion, right? So again, if you guys have any questions, please feel free to reach out to me via Discord. If you guys want to join my free Discord, that's that first link down below. But if you guys want to join my daily live trading sessions, take 1 minute, click the second link in the description. It's my Learn Plan Profit group. And again, you can see me trade live as soon as tomorrow at market open. Like always, let's make sure that we end the year on a green note. Take it easy, team.